Well, shares of Meta trading slightly higher on another analyst upgrade following the launch of Threads. We're looking at gains of just about 1%. Cowen upgrading the stock to outperform, raising its price target nearly 60%. One of the reasons that Cowen is bullish, potential upside if and when Meta starts to monetize Threads. Threads so far has been a huge hit, surpassing 100 million users in the first 5 days of the app's launch. For more on this and some of the other trending topics in your feed, we want to bring in Matt Kohrs. He's host of the Matt Kohrs Show. Matt, it's great to have you here. So we love talking to you because you have a very good sense. You have a pulse on what retail traders, investors are thinking about really everything. But when it comes to Threads, the launch of Threads, clearly it has been a massive hit in terms of consumer adoption at the get-go. Mm-hmm. How bullish are retail traders on this launch and what it means for Meta?
I mean, with this newest battle of the billionaires, there's a lot of excitement. And I think it goes both ways, but for Meta and specifically Threads, a lot of people are talking about it every single day. And I think that 100 million number of the signups, I think that took everyone by surprise. And as the analysts rightfully pointed out, if this can be monetized, which if Meta is good at one thing, it's definitely monetizing its users, I think this could be very impressive for the business. But then that leads to the larger conversation of, will it win out? I don't think so. My personal opinion is that between Threads and Twitter, there's a very realistic shot that both end up coexisting.
Coexist. I mean, when you look at just usage in terms of Twitter, I mean, it's seen a dramatic drop. We've seen an exodus of advertising. Could this potentially be, because there's been talk of this, a Twitter killer?
I don't really think so. I understand that some of the decisions and some of the things that have played out on Twitter has left a sour taste in some of the advertisers' mouth, for sure. But even today, it was just announced of a new ad sharing program, and a lot of people are sending screenshots of how much they're making. As many people don't like Elon, there's a lot of people that absolutely love him. So that's why I think we're going to see almost a fractured written social media economy.
So, Matt, you think that there's a use case, obviously, here for both of these companies, for Twitter and Threads to coexist, or both these apps, I should say. What is the use case? Is there a different use case for Threads versus why people would also be using Twitter?
Not a reasonable one that I can come up with. I think it's more of the overall company that they're supporting. Right now, obviously, it's new. We're not even a week old. And with Threads, obviously, there's some UI and UX that needs to be improved. My personal opinion is right now, Twitter is a better functioning app. But also, if we give it a couple months, a couple quarters, I'm sure it's going to be like in the same fighting class.
And then you say it's a better functioning. Do you see Meta pulling out that functionality and developing it better? And also speaking to the monetization aspect, I mean, analysts are expecting them to be able to monetize it better in general. Like, for instance, when you compare it to Reels, which they haven't been able to monetize as well as they'd like. What's your expectation?
I definitely agree with you that monetization will come. But I think what I'm personally more excited about and why I'm actually bullish now on Meta more than I have been in a while is because they've subtly tried to pull away from this branding of metaverse. Obviously, it was a large issue for them, like financially, resource-wise. So they're getting out of that. Stock plummeted from, I believe, 380 all the way down to 80, now up 250%. I think it'll keep going because of what's going on in the world of AI between Instagram and Facebook. They already had a very unique data set. And now adding in Threads, it's a whole nother data set that they'll be able to train their own proprietary AI on. So beyond just revenue of selling ads and whatnot, because it's a little bit more brand safe, we'll say, relative to Twitter, I think the AI play of what they're going to do with the data is very exciting.
All right, Matt, let's talk about another trending topic that I know that you've been watching, and that's a Bitcoin Spot ETF. The SEC's decision on Bitcoin Spot ETFs is something that has certainly been trending, and all this in the news because BlackRock just last month did file some paperwork to launch its own spot Bitcoin ETF. We spoke to Grayscale Investment CEO Michael Sonnenschein on the show yesterday. He talked about demand, or what demand would be like for this type of product. Let's take a listen to what he had to say.
It continues to show that, investor interest and appetite for this asset class isn't going away. And the continuation of Bitcoin futures, Bitcoin levered futures ETFs, these are all additional access points that investors now have. There are, trillions of dollars on the sideline, even just in the financial advisor market, that are looking for a convenient solution to give their clients exposure to Bitcoin. So we do think it could be a material, moment for Bitcoin, to say the least.
Matt, do you agree? How do you think that a product like this would be received amongst investors?
I mean, obviously, as the CEO of Grayscale, he's far more informed than I am, but I would love to re-echo what he's saying. On top of it, it is definitely a win for crypto and Bitcoin specifically. And today, positive news coming out with Ripple as well. So right now, the SEC is kind of losing some cases while the crypto-loving public is starting to win. But just to throw some numbers on it, what interests me is if we get this spot ETF, that really allows far more people to invest in Bitcoin that never would have before. If you look at the IRA total money in the US right now, it's just over 12 trillion. If you look at 401ks, we're getting closer to 20 trillion. If a small percentage of that now feels comfortable getting into Bitcoin through this ETF because there's just more highway on-ramps for Wall Street to be able to serve this to their clients, I mean, that's not negligible by any means. So for me, this is bullish, and that's probably part of the reason why we're seeing Coinbase, I believe, rip 25% today.
So really quickly, I want to ask you, so yes, it does give more credibility to the crypto space, which has certainly been a concern, especially with the crackdown. But I've heard that retail traders aren't too keen on this. So this, I guess, this institutional push. What is your audience saying about this push into crypto from, say, a BlackRock, Fidelity trying to get in? What are they saying to you?
I think a lot of my retail audience who already enjoys crypto, they did it. They have their own keys, they're storing it on their own ledger, but there's a lot of just the investing public who they don't want to remember a 12-phrase code for them to recover. They like some of the credibility, so I don't think my audience is particularly against it. It's not really for them, but right now, I think it's exciting of how many people will be able to invest in a general sense.
All right, Matt, another big topic for millions of Americans, and that's student loan debt. Borrowers are going to start needing to repay their student loan debt this fall. How do you see this affecting the trader community? Just the amount that people are willing to risk in trades, is that going to affect behavior at all?
I don't think it's the wildest jump to think that it might come down a little bit, but it's tough because we're already coming from quite a peak of record highs in zero DTE trading. So I could see it kind of going both ways, but I do think maybe less money also because of the timing of it. I mean, if the average, according to Morgan Stanley, the average payment is going to be in the realm of $300 to $400 a month. That's $300 to $400 a month. That's not going to be going on flights to restaurants in your trading account. So I think there are going to be some ripple effects, but it'll be interesting to see how it plays out, I believe, starting in October.